Hello and welcome to our platform, where we let your data tell you a story. Have you ever wondered why August is often labeled as a tough month for the stock markets? If you follow financial news, you might have noticed a recurring theme. August is frequently portrayed as a particularly challenging month for the stock markets. Headlines from leading financial news outlets emphasize this trend, highlighting dismal performances and investor concerns. But how accurate are these portrayals? Do they hold up against historical data, or they are just sensational headlines? In this video, we will dive deep into the numbers, analyzing the monthly performance of the JSE All Share Index from January 2013 to December 2023 to see if August truly deserves a bad reputation. Let us uncover the truth behind the headlines and understand the real story of the stock market's August performance using our programming. So in this episode, we will actually leverage off 4 libraries, which is Tidyquant, Lubridate, Dplyr, and Plotly, in order for us to achieve the results that we need to see for our exercise today. The first thing that we need to note is that for retrieval of data, we will utilize Tidyquant. And then Lubridate is going to be used to handle any data that's related to date formats. And then we are actually going to use Dplyr for data manipulation, that is filtering out rows and doing any calculations that we're going to utilize in this exercise. And then lastly, what we're going to do is we're actually going to leverage off the Plotly library to plot our charts. So let's go ahead and actually load our libraries. So the next step is to actually then define our ticker symbols. So we are actually going to be retrieving J203.jo. In order for us to be able to retrieve it successfully, you're not going to type out J203 like this .jo and just retrieve. You always have to remember that you need to put in a special character at the beginning of your ticker symbol. And this special character looks as displayed in this example. And then we are going to run a line of code to get historical data. So I've tried to get as much data as we can. So I've said my starting period is January in year 2000 up to date, so that we can see how much data we can get. And then the next step is we are actually going to calculate the monthly returns. When we calculate the monthly returns, we will notice that the library Tidyquant requires us to use a pipe operator before just soon after our data frame, and then we can call out the function that we need to utilize. So each and every time you're using Tidyquant, it is going to be the name of the object that you're creating, and then the data that you're filtering through in order for the calculations to be done. And then we get the results. So the library Tidyquant has got a special function which is called transmute, which is a function that we're going to use to actually modify the data set that we had pulled out, which is JSE data. We'll inspect it later and then get to see how, maybe let me just do it right away so that we can see the power of the function transmute. So if we run this piece of code, what we will see is the process is running to retrieve the data. Once the data has been retrieved, we can actually then inspect the data to see how it looks like. So we're going to head and see that it looks like JSE data. So our data looks like this, right? So we got the ticker symbol, and then we got the dates, and then we got the open, the high, the low, the close, the volume, and the adjusted price, right? So the next step that we're going to do is to leverage off the TQ transmute function to calculate the returns. So what we're basically doing here is then we're just saying our JSE data that we created, and we put a pipe operator here. And then after that, we're going to call the function transmute to actually then select the adjusted column. So we are calculating our returns based on the adjusted price column. And then the function that we're going to utilize is period return. If you have worked with a library called QuantMod before, you know that this function is from QuantMod. And the beauty of Tidyquant is that it actually integrates different functions from different quantitative modeling libraries that exist for R, and one of them is QuantMod. And then our period is going to be monthly, and we want to rename our column that will bring the return results as a monthly underscore return. If we go ahead and run this line of code, we will then get our monthly returns table showing. So as you can see that our monthly returns table now shows, and it shows in a different format than the data set that we saw earlier on. So now what we see here is we asked for data from year 2000, but we only managed to get data starting from February 2012. And the monthly returns have been calculated all the way until I think today, so 30 July. That's the latest that we managed to get the data, right? So we're happy with the result because that's what we want to see. And then we move on to the next step now. So in this next step, what we're going to do is we're going to add a year and month columns. How do we do that? We actually then manipulate the monthly returns data frame that we just created right now. And remember, when we are manipulating that data set, what we will do is we are not going to give it another name, but we will still call it monthly returns, and then we'll say it is equals to monthly returns, and then you put a pipe operator here. This pipe operator will then help you then utilize the function that we need to utilize, which is this time around we are using a function called mutate, and mutate is also a function that we get from a library called Dplyr, right, for data manipulation purposes. So mutate will basically amend the data frame that we already have by actually adding two columns. So we're actually going to add a column called year, and how we are actually going to get the column called year, we're going to leverage off the library Lubridate to actually get the year, and also we are actually going to do the same for the month, and then run this line of code, and then you can see that we now have got the year and the month, right? Once you have the year and the month, then our data is even easier to work with, because our intention is to actually find out the profitable months, right? From 2012 to, from 2018 to 2023. So in order for us to do that, what we can then do is, seeing that our data set starts from 2012, our next step is to then filter out the years with less than 12 months of data, right? In order for us to do that, we are actually going to create an object called complete years. And out of that object called complete years, we're going to say, from our monthly returns data frame, we want to group by year and then filter on any rows that do not have 12 months, right? So that we can get the complete years. So if we run this, we will see that you get now a new data set, and this data set obviously will have much lesser data than what we had. So see, you can look here on your top right, our monthly returns data frame had 150 observations with 4 variables. And now for complete years, it has reduced to 132 observations with 4 variables, right? And it maintained the structure that we had, where we now have the returns, the year and the month populating. Okay, so our next step is to actually then calculate the number of times each month would have been in a profit territory or had positive returns, right? And we will also then calculate that value as a percentage of the number of years that we are analyzing this scenario. So the first thing that we're actually going to do is we're going to create an object called win percentage. And then we are actually going to leverage off the complete years data frame that we recently created. And then we will group by month and then create a column which we will call profitable months. And the profitable months will be calculated by summarizing actually the sum of the monthly returns which are greater than 0. So this will give us the count of the number of times in which each month would have had a positive return. And then from there, we're also going to create a second column, another column that will have the name win percentage. And this is actually going to be derived from the number of times each month would have been in a profit territory, which is our profitable months, divided by the number of years that we are analyzing this scenario, and we multiply that by 100, and we will get the percentage. So the win percentage data frame will then become the next data frame that we create. Let's go ahead and run our code to see what results will come out. There we go. As you can see now that we have got a data table that has got month, profitable months, and win percentage showing, and it has been arranged in a descending order, right? So the next step that we'll do is to actually then plot a chart. So we are going to plot a chart based on the number of months, that is the number of times each month would have been profitable. That's the first chart that we want to plot and have a look at. So we are going to leverage off a library called Plotly. And with Plotly, we will be able to also utilize the function ggplot within Plotly. So what we're going to do is we're going to create an object, and then we call it P for plot, and then we will call the ggplot function, the ggplot function, right? And then we recently created a win percentage data frame, and that's the data frame that we're going to utilize to plot our chart. So then we just have to make sure that our X and our Y axis are ordered correctly, and our legend is going to show in form of months. So we are going to fill equals month, and then we also want our chart to be able to show us the month and the value that is corresponding to the month as shown under the profitable months column, right? So, and then this is actually rounded off to 2 decimal places, but and it's something that is not necessary for this exercise, but I just put it in just to format my data, just in case there's anything that doesn't look right. And then what we will do is we will also have a title. We've just put in there our title, and then we will label our X and our Y axis as month and the number of times each month was profitable. And then we will use a theme called minimal, and this scale fill manual values rainbow. It's just that we want our color coding to be a rainbow format, and we want to have our y-axis showing as whole numbers. So that's what this line item is doing. And then the last part is to convert our ggplot to Plotly chart. And how we do this is we deploy ggplotly function to do that. So there we go with how we go about plotting our Plotly chart, and then let's just run the script to see what happens. And then here we go, our chart is here. As you can see that we have our chart showing, and July and April definitely consistently outperforming, and August and September, they are lagging behind. So that somewhat answers our question as to whether August does actually perform poorly most of the times, as the media would say. But let's just look at the graph in a more detail, because you can see that April, July, and January are the months with the highest actually numbers, indicating that the JSE All Share Index experienced positive returns in this month and more frequently than the other months. And then we also have what maybe we can call our moderate performing months, which are then October, December, and November, and February and March. These are months which had a moderate performance, yet also we can actually then say this suggests that there's a decent chance of positive returns during this period, but not as consistently high as the top performing months, right? And then our low performing months then becomes May, June, August, and September, where we can actually see that these indicate that they are least likely to yield positive returns these months compared to their counterparts. That is the other ones that we looked at. And if you look at it, August and September, these are the weakest months, with August having quite a low number there. That's 3 out of the 11 times we tested this. We had positive returns only 3 times, and then 2 times out of the 11 for September. So in summary, what we can conclude here is that this chart clearly shows that August is one of the least favorable months for the JSE All Share Index, aligning with the headlines that highlight August's dismal reputation, right? And what one can actually think of is investors might consider being more cautious during August and September, potentially adjusting their portfolios or employing hedging strategies during these months. And our positive months, which are April, July, and January, appear to be the best months of the JSE All Share Index, and this is where actually investors might expect higher probabilities of positive returns. Yeah. There you have it. If you like this kind of content, if you enjoyed watching this video, please do subscribe to our channel. You do like our content, and also do comment and let us know what you think, what you expect to see. We will definitely consider that. Remember, this is a platform where we let your data tell you a story. Happy coding. Until next time.